day traders, and welcome to the premium video newsletter for Wednesday, August 14, 2013. Before we begin, I wanted to make an interesting comment about Apple computers. I've been talking about Apple computers and how after earnings it reverted back to the downtrend, and how most stocks revert back to the trend within a week or two after earnings that are contrary to the trend of the stock. Evidently yesterday, one billionaire named Carl Icahn said on Twitter that he has taken a, quote, large position in Apple and urged its CEO to step up stock buybacks. This was on Twitter. Here's my view on this. There would be no reason on earth to go on Twitter and make statements like that unless you're trying to manipulate the price of the stock. Now, it's not illegal what he did, but it is market manipulation. The more important question becomes, why did he do what he did? And the answer is because Apple was reverting back to its trend, just as I predicted before the announcement came out. And unless we hear other unforeseeable news, the stock will be moving back in line with the trend within the next 2 weeks. From what I understand, Mr. Icahn is a good friend with the CEO of Apple Computers, and I would be very surprised if this tweet was not planned beforehand between Mr. Icahn and Apple Computers. To me, it just looks like a desperate attempt to keep Apple from sinking down hard. Getting back to our regular program, let's start off with the fundamentals. The U.S. Department of Labor said earlier that producers' prices were flat last month. This was disappointing since expectations were for a 0.3% increase. The disappointing data raised fresh doubt over whether the economic recovery is strong enough for the Federal Reserve to begin phasing out its $85 billion a month asset purchase program later this year. Investors have closely been looking out for U.S. data reports recently to gauge if they will strengthen or weaken the case for the Feds to reduce its bond purchases. Any improvement in the U.S. economy will likely reinforce the view that the central bank will begin to taper its bond purchase program in the coming months. The question everyone is asking is, did the stock market peak? Let's look at a few factors that will help us answer this question. Yesterday, I discussed the broad market and the tech market and explained how the tech market has a better chance to rally because it's sloping less down and it has less sectors holding it down. I was also anticipating more range-bound and choppy trading action, and that's what we saw from the broad market today. I would keep my eye on the 1680 level in the S&P, and if we can maintain above that level for the next 2 days. What's really starting to bother me about the market is the transports. If you notice, on the chart we went down another level. This is not very bullish for the broad market, to say the least. The transports are very good at leading both the Dow and the S&P, and I can tell that this sector is looking weaker every day so far this week. Another sector that has a major influence on the broad market is the financial sector. Here we had a breakdown outside of a bearish triangle pattern, and I'm not seeing any major buying coming into this market as of right now. This sector already looks like it's tried testing the top, failed, and now is breaking down. So as far as I can see, we have two of the biggest sectors in the S&P either breaking down or making new lows, and this is not very bullish. I'm looking for this ETF to trade at the $20 level within the next 2 weeks if the market sentiment does not change. Finally, let's look at the Dow. The market broke a short-term support level at around 15.5 level and is also looking weaker. Tomorrow we have two big reports, the Consumer Price Index and more importantly the unemployment numbers, which are being watched carefully by the Feds as guidance to cut the stimuli. So tomorrow should be a big day for stocks as well as bonds. Keep your eye on the 15,200 level for the next support level on the downside. And there's plenty of resistance now at the 15,600 level. The market internals right now are not as one-sided as you would expect. The ratio of stocks making new highs is still substantially higher than stocks making new lows. And I think we have to see some real panic to sell off right now. Since we are near all-time highs, investors' confidence is still very strong, and hedge funds do not like to liquidate stocks near all-time highs. It does not look good for them. So unless we see some real selling pressure coming into this market, I'm anticipating a slow drift in the broad market, which is not that bad considering the level of volume in the market right now. The last thing we need is a panic because volume is low and it can cause a major sell-off. Let's see how tomorrow's numbers come out, but for now, everything is pointing to the downside in the US market. Crude oil futures trimmed losses on Wednesday to move off the lowest level of the sessions after a report from the US government showed that oil supplies fell more than expected last week. The US Energy Information Administration said in its weekly report that US crude oil inventories fell by 2.8 million barrels in the week ending August 9th, compared to expectations for a decline of only 1.5 million barrels. That's big. Total US crude oil inventory stood at 360.5 million barrels as of last week. On a technical level, I would expect this news to cause a bigger rally than what we saw. The first thing I did was look at volume to see if it was unusually low, and I didn't find that. So my analysis has to go back to what I stated yesterday. And if you missed yesterday's tutorial, I was making a case for lower prices because it doesn't look like we can take out the high 108 level, which we reached twice within the last month of trading. Today's trading action confirms even more so that this market is overbought on a technical level. When markets are truly bullish or bearish, they become extra sensitive to outside information. And today's trading action demonstrated that it would take a lot more than average volume to move this market above the high 108 area. Further, unless tomorrow's employment numbers have a major influence on the bond market, I doubt we will see higher levels. So for now, I'm looking more for a break to the 104 area than a rise above the 108 area. Let's see how we trade tomorrow, but if this report couldn't cause real momentum and stronger volume, I doubt something indirectly related to this market will tomorrow. The US dollar, which I'm bearish on at this time, is once again looking weaker. Most of the buying during the last 3 days was shorts covering positions and taking profits. I've been bearish on this market and remain bearish till the US monetary policy tightens, and my goal is at 80.50. I'm fairly confident we will see this level with a bit more patience. Stay short the dollar, and if you're not short, consider shorting at these levels with a target of 80.50. The pivot we just saw is a good risk stop for a short-term trade going down. There's a few new setups for tomorrow, but in the big scheme of things, be careful taking positions to the long side because the market is definitely leaning down. This may change if tomorrow's numbers are extremely positive, but for now, on a technical level, the market is range-bound with a slightly downwards bias as it has been since the beginning of the week. The first setup is a 4x4 to the downside on CVS Pharmacy, ticker symbol CVS. Place a sell stop 10 cents below today's low, and if filled, place a buy stop 15 cents above today's high. The second setup is a 4x4 to the upside, and remember we have to be cautious right now to the upside. The ticker symbol is ETE, and we need to buy on a stop 10 cents above today's high, and if filled, place a sell stop 15 cents below today's low. If the trade doesn't trigger within the first 2 hours of the trading day, cancel both orders. That's it for today's session. Tomorrow, we may see some volatility, so don't initiate large positions before the key reports come out. Have a great night, everyone, and I will update you tomorrow as usual.